Good afternoon. Welcome back to Money Control's live stream. You're watching Closing Bell with me, Lovisha, Darad, and my colleague Yatin, Mota. Well, we are bidding goodbye to 2024 and we are welcoming 2025 tomorrow. But while we did start with deep red amid a tepid global handover, we staged a very smart recovery in the later half of the session. Well, Sensex was up over 550 points from the day's low, and Nifty was also up about 150 points from the day's low. Midcap index especially, that recovered very strongly, and that was up about 2% from day's low and ended flat in the green. So yes, from deep red to flat red, a good rebound that came in for the markets. And for this year, it will be the 9th straight year for a positive return for Nifty, wherein it has managed to gain about 9%. Even Sensex has been up about 8% this year. On the other hand, broader indices, mid-cap and small-cap indices have also surged about 24% this year. Yatin, good set of returns this year from 21,700 that we started to 26,200, a lifetime high that we hit. But now we are starting 2025 with about 23,600. And experts are pointing a much difficult path to gain from here on. So what do you see for 2025?
Absolutely. I think, the Awas poll obviously will make it public tomorrow, but the indications are that, 2025 will be quite selective, quite disruptive, and when it comes to returns, the expectations are quite moderate. Obviously, when we are going into the year with moderate expectations, the markets usually tend to surprise us with, all their energy. But about 2024, despite the yo-yo in the markets, almost 10% off the recent highs, we still managed to end the year positive by about 9%, as you were mentioning. So yes, a great year with election outcomes both in India as well as in America, surprising investors, with the central banks starting to cut rates. Whether or not RBI will cut rates aggressively, something to be watched out for. But yes, with 2025 start, it seems to be a year of moderate expectations.
Yeah, that's right. If we look at some of the top sector gainers for today, well, definitely Nifty Pharma index has extended its gain to the 4th straight day, and it was once again up about 0.7%. Oil and gas index also was up about 1%. Nifty Auto index did well. Bank Nifty, however, did see a cut of about 0.1%. And IT index, that was the major sectoral loser for today's year. So, if we, on the other hand, if you look at on the top Nifty 50 gainers, we can see Darad Electronics, ONGC, Kotak Mahindra, Trent, Coal India, all of them did well. Trent, of course, one of the top Nifty 50 performers in 2024 as well. And today also it did finish on a very strong note. On the losing end, after yesterday's 7% surge, we can see Adani Enterprises as the top Nifty 50 laggard, down about 2% in today's trade. Tech stocks, as I was mentioning about the weakness in the Nifty IT index, that dominated the list, with the likes of Kotak Mahindra, TCS, Infosys, all of them seeing a cut of about 1 to 2%. But yes, Yatin, now back to you for the broader markets, because we saw both the mid caps and small caps outperformed.
Clearly, the outperformance was there. In fact, stocks like CRISIL, RITES, Reddington making a comeback. In fact, CRISIL and RITES gained nearly 10 to 11% in trade. Post the block deal, wherein promoters are said to have sold their shares, Ease My Trip, that stock was down nearly 7% in trade. Bharti Hexa, 5-Star Finance and Adani Wilmar were the other losers in trade. Adani Wilmar, for obvious reasons that the Adani group, which is Adani Enterprises, will be selling their 13% stake in open market. And the balance stake will be sold to Wilmar International at a price not exceeding 305. So probably the shares of Adani Wilmar finding their base around that 305 level. So overall, again, a stock specific day for Indian stock markets, wherein the advance decline ratio was favoring the advances, largely because of the favorable moves in the mid and small cap index.
That's right. Now let's break down some of the stocks that did grab limelight in the Dalal Street today. Well, of course, as I was mentioning about the Nifty IT index, that came under an intensified selling pressure and stood out to be one of the top sectoral losers as well. So what led to the underperformance? Well, there were 5 factors in play, of course. One, the dollar index that continues to remain above the 107 odd levels. Second, US Treasury yields above that 4.5%. Third, some profit booking likely because we are at the year ender, so some profit booking could be possible on that end. And the index has already seen of about 22% surge this year as well. Fourth, tempered expectation from Q3 onwards for December quarter, because it is typically a seasonally weak quarter, and we will be seeing some rollout of the Q3 results from January onwards as well. And fifth, the hawkish stance of US Fed as they are revising their rate cut guidance for the next year as well. So all of these factors did play out and have been capping the upside in any of the tech stocks for this month as well. Now today the large cap IT majors that were down about 1 to 3%, while the mid cap IT names such as Coforge and Persistent Systems also lost about 1 to 4%. Now all depends on how the Q3 season pans out. We will be beginning with HCL results on January 13. TCS day date is not out yet, but we'll watch out on that. Yatin, the street is already pricing in a recovery in the discretionary spends, but it all depends if Q3 is able to deliver on that front. Now all of them are already trading at quite expensive levels, all of the IT stocks. So it is either going to be an inline performance or a completely downbeat.
So I think the December quarter earnings are quite important in the sense that how many furloughs were there, what was the impact there, how many working days were utilized in the December quarter is something important we will watch out for. But most important would be the outlook for 2025. Now in an environment where Donald Trump is now the president elect with policies probably getting announced somewhere after middle of January. IT companies are preparing themselves to brace for a lot of changes, from visas to discretionary spends to what is the outlook for the growth in the US market. So I think the US market outlook and the outlook for 2025 is something important that we will be watching out for when it comes to the IT earnings. I think Infosys' guidance and TCS's results in the next 2 weeks is something that we'll be monitoring very closely.
That's right. From IT, let's move on to the next stock in focus that did grab eyes. That is your Rail Vikas Nigam, that is your RVNL. The stock did surge over 8% after it won 2 orders in just 2 days. First, it secured about 404 crore rupees contract from the East Coast Railway for the Koraput Singapore Road doubling project. And the second, it won a 137 crore rupees contract from the Central Railway for Bhusawal Khandwa project. Now, the said contract is expected to be executed over the next 24 months. And RVNL as a stock has more than doubled this year, or surged about 134%. However, we did see that RVNL did fall about 50% from its record high levels. So yes, that is the underperformance that we saw in the second half as well. Yet in railway stocks, they are gathering some focus once again, because now elections are behind and all eyes are on the capex to pick up. But certain pockets still remain ahead of the fundamentals. So some wait and watch action could be warranted at this time.
Right, and I think all of these railway PSU stocks have seen a good healthy correction from the peaks in 2024. Yes, earnings growth is not yet caught up with the price move that we saw. So probably there was some correction. But now I think there is again some traction of ordering. Second half, as the government also pointing out, that the capex from government companies, PSUs, and the government itself will be picking up. So we'll watch out for all of those data points. But RVNL, that stock has seen multi-bagger returns in the past 2-3 years, and now the stock is consolidating. And when the good news comes, probably we see a 3-4% kind of pop normally.
That's right. Now let's move on to the next stock in focus. It has been on a declining trend for the 2 straight days, and it has hit lower circuit for 2 days, and that is your Zinka Logistics. Well, the stock did come under limelight after Morgan Stanley has put out an underweight rating on the stock and has assigned a target price of 450 rupees per share. Now this implies another 16% downside. Now Zinka Logistics, that basically operates the black book platform for the truck operators, and Morgan Stanley analysts believe that though the company has strong fundamentals and growth potential as well, the current price might already reflect much of the optimism. And we can see that the stock has already more than doubled since its November listing, and it is trading at 34 times the FY27 adjusted EBITDA, which means that it is at the higher end compared to its peers as well. Yet then, despite a weak market, majority of the listings that are being favorably rewarded. Even today we saw that Unimec Aerospace debuted at a very solid 90% premium. So a lot of listings are getting quite a bit of a limelight.
Yes, and Zinka Logistics, I think the shares run up post the listing was quite aggressive. In fact, we saw almost a 30-40% move come in post the listing day gains.
Yeah.
And now with brokerages feeling that the earnings are slightly weak, the valuations are slightly stretched, probably time for the stock to give up some bit of gains that they made during the listing side. But talking about businesses which have seen some support from the government is the soda ash segment or the chemical segment. Now you look at the DGFT, which is the Director General of Foreign Trade circular. They have put restrictions on imports of soda ash from neighboring countries, especially China, wherein we saw dumping at prices of nearly $200 per metric ton, which is almost 16,000 rupees or so. Now, with this notification, there will be, a minimum import price to soda ash, which will be slightly higher than 20,000 rupees per metric ton, which means that from the dumping price, we could see a 20%, 25% kind of a improvement to the base price of imports. Not only that, companies like DCW, GHCL, Tata Chemicals will benefit from this move, because a lot of chemicals from China are now getting dumped into India. And the overall imports for soda ash was freely available. Now it is now in the restricted list by the DGFT notification. So clearly, stocks like Tata Chemicals, GHCL, DCW saw a bump up in trade after this government notification. We'll watch out for the entire space, because the overall government view is that when the domestic industries get hurt, probably it's time to get a safeguard duty, anti-dumping duty, or probably put a minimum import price. So yes, if you talk about the sectors like steel, chemicals, we are seeing some proactive government measures, and the market is probably giving it a thumbs up, because the shares of Tata Chemicals and GHCL, as I mentioned, were up in trade by nearly 2 to 5%.
That's right. Tata Chemicals underperformed this year, but we'll watch out for this stock as well. So it's the New Year's Eve. We'll watch out how the markets perform entering as to the 2025 as well. Yatin, we wish you a very happy New Year as well, and to all the viewers as well at this point of time. But with that, we have come to an end of this edition of the Closing Bell. Have a great New Year's Eve, and we will meet you tomorrow on the first day of 2025. For now, signing off, Yatin and me. Thank you for watching.